My question for you is slightly different. You talked briefly about the NASDAQ topping out in 2000 after a 20-year bull run in America. Japan topped out in 1989. Because you watch so many markets across the globe, what do you think is there a thumb of rule of what is the duration of bull markets? How much do they go up? And then what are the telltale signs that a bull market might be entering its last leg? Could you share some insights on that?
Well, in the context, I would normally look at the credit cycle, but in the context of India, I don't think we're anywhere near ending the bull market.
No, but if and when, what would be the sign? Would the credit cycle, leverage cycle would be very high? Would that?
Yes, yes. So my thesis on India is that what we've been hoping for, at least our base case on India for the last few years, is that we're hoping for a repeat of the cycle one had between 2002 and 2009. Which basically began with the upturn in the property market, which was not undone by a monetary tightening cycle. And then that morphed into a broader capex cycle, which is what happened in that period. So this time around, we've come out of a 7-year property downturn. And I believe we're now third year into a property upturn. We've had a monetary tightening cycle in India, which has not derailed the property upturn. And we are now, in the last year, I would say, seeing growing evidence of a pickup in private sector investment. So I'm hoping that this private sector investment cycle continues. If I'm wrong on that, then the equity market's not going to do as well as what I believe. Right. But the difference between this cycle and the last cycle is that we've had this huge government-funded infrastructure capex cycle, which wasn't the case before 2002-03. And that's just very visible with one's own eyes. So obviously, under the BJP government, we've had dramatic structural reforms over the 10-year period, which you're now seeing the fruits of. So, yeah, to me, we're nowhere near the end of the bull market.
Okay. But you and I were both surprised by the election results. Clearly, I was too, and you admitted you were too out there. Given what happened, would you expect the government now to reflect on new economic probabilities? Does the coalition government change their view? And would be reflective in the budget?
And that's I mean, it would be much, in my personal opinion, it'd be much better if the government had a complete, absolute majority. Because obviously you've achieved, there's been some phenomenal reforms achieved in India, in my opinion, although obviously a lot of the Western media wouldn't share that view. So tactically, it probably makes sense if you're running Indian money to put a bit more money in sort of consumption, rural plays, which will be beneficiaries of likely actions taken in the budget from a tactical basis. But structurally, I'm keeping my portfolio more weighted towards investment than consumption.